I had it and then I was like, no, that's not it. This market is expensive right now. I know we hear it all the time. Everyone's upset that the boomers, the 1980s, they were able to buy homes super cheap and now they're sitting on hundreds and thousands of dollars of equity. They bought that house for what, 100 and something K, sometimes less than 100K, and now it's worth over $1 million. My younger peeps, our biggest mistake was we were too young when housing was cheaper, right? How do we get around that? Are we just screwed? We just can't figure it out? It just is what it is. You can't buy a house, it's unaffordable? No. It's not. There are so many different options, but sometimes you got to think a little bit outside the box if you want to make it happen. So today I want to go over some unique financing solutions. Most of these I can do, and there's actually a couple that I won't even be able to do, but they are possible, and I just want to make you aware of what they are. I was having a conversation with a guy who reached out and was in a very similar situation that I think a lot of people are in. Wants to buy a house, knows the value of homeownership, knows that it can help create wealth and put you in a better spot financially, but just has no idea how to do it. So for this individual, they were concerned because they didn't think they made enough money, or maybe didn't have enough income, or was a little worried about their credit. So those are the big three, right? Income, money, and credit. Now here's the secret. You only need 2 out of those 3 to get a mortgage loan. And I'm gonna share some options today. Even if you have none of those, if you have no income, no credit, no money for a down payment, there still might be a loan option for you out there. So getting back to that same analogy, right? The big 3. So in like construction or any other type of thing, it's either good, fast, or cheap, and you get to pick 2 of those 3 things, right? Similar with mortgages, except it's income, money, and credit. If you have bad credit, but you've got good income and a good amount of money for a down payment, I got loan options for you. And vice versa. If you've got good credit and good income, but no money, I've got loan options for you. So let's talk about some of the actual loan solutions and products that we can put you in with knowing that information. Let's talk about the no income piece, right? Because that's a big one. I've been getting a few DMs about, are there loan options out there that do not require income verifications? Well, yes, there are. But same thing, you gotta have good credit and you gotta have a large down payment. They're called the DSCR loans. The hell is DSCR, right? Stands for Debt Service Coverage Ratio. What the hell does that mean? Well, let me break it down for you super simple. These loans are specifically for an investment property. So if you're looking to get into the investment property game, this is the loan that you would want to be looking for. Basically what it is, we are not gonna look at any income, any tax returns, no bank statements. Well, bank statements for the asset portion, but not for the income part of it. When you're going to buy a house as a rental property, we know that there's going to be rental income. With that rental income, when we go to order the appraisal, which is the appraiser is going to tell us the value of the home, but on these specific types of loans, he's also going to give us the comparable rent schedule, meaning all the comparable homes that are being rented and what you can expect to receive in rental income for the property that you're receiving. So let's just say for our purposes that you can plan to receive around $3,000 a month in rental income on this property. Now keep in mind, you do need pretty decent credit on this one. We're talking 700 plus, and then you do need 20% down. So you need a decent amount of money for the down payment. But this is where it gets cool. People that understand money will understand this concept. If your mortgage payment is less than the amount of money you will be receiving every single month in rent, the loan is approved. That simple. We're literally just making sure that this property can cash flow. So if it's going to be making money day one, it doesn't even matter what the interest rate is, right? Because you know long term you're gonna get that equity built in. That's going to provide you with an additional source of money down the road when you wanna do it again. And it's gonna provide you with that monthly cash flow so that you've just got money coming in. This is a great way to build passive income. But again, it's going to cost a little bit more money up front and it's going to be a little bit more expensive. But this is a fantastic solution for those that either don't have the income on paper, maybe you're self-employed and you write everything off, you know you wanted to buy an investment property. This is how you can do it with the DSCR loan. They're super cool, just specifically for investment properties. Now here's a really fun one. I feel like this one does not get talked about enough and it is such an amazing loan. The regular FHA loan, right? We talk about it all the time. FHA, minimum down. You can use down payment assistance with it. It's gotta be your primary residence. You can do it with, honestly, a pretty bad credit score. The FHA will go down to a 580 credit score. You don't need great credit to be able to do this. And you don't need a ton of money, 3.5% down. Or if you've got a slightly higher credit score, we could look at down payment assistance. But did you know with the FHA loan, you can actually buy up to a 4-unit property? So let's say you find a fourplex, and fourplex is probably gonna be a little bit more expensive depending on where you're looking. Well, don't worry, that FHA loan limit, it increases based on how many units and whatever county you're looking to purchase in. In fact, I just looked it up for the LA County in California, and it was just over $2.1 million for the FHA loan limit for a 4-unit property, which means you could buy literally a $2 million property with as little as a 3.5% down payment. And here's the best part. You live in one of those units as your primary residence, you rent out the other 3. And in most cases, the amount of money that you're gonna be getting from those other 3 properties is probably gonna pay for your mortgage entirely. So now you're essentially living rent-free in a home that's not costing you anything, and you're making extra rental income. That is, to me, one of the coolest things. If you're younger, if you have that availability, don't have kids, or you can move around a lot, this is such a fantastic idea. You don't even have to live there that long. You could live there for 6 months or a year, refinance it into a conventional loan, and then get another FHA loan on another multi-unit property and do it all over again. You can do that as many times as you want. And the best part is that rental income that you're gonna be receiving, that's extra income we can use on paper to help you qualify for that loan. I had this happen too. I had a client, he reached out, we got him pre-qualified. If he were to buy a single family home based on this dude's income, he only qualified for I wanna say it was like $280K. It was like just shy of 300 grand. And our marketer, wherever you're looking to buy, that doesn't get you a lot of house. There's not very many homes available at that price point. But check this out. When we factored in the multifamily situation and we use that extra rental income, that got him pre-qualified for $850,000. That's a huge jump from $280 to $850, because again, that's extra income we can use on the application, which helps you qualify for more. And again, you always want to look at dollars in, dollars out. So you can get a little creative with this. If your mortgage payment is going to be $4,000, but you're charging $1,000 a pop for each one of those units, well, guess what? Now you're only paying $1,000 to live in that property. That's a pretty low mortgage payment, and I guarantee you can't find rent cheaper than that. And you don't even have to go that high in purchase price. Like, you could find, there's gonna be some rougher ones if you're willing to put in the work, but you could find one for cheaper, rent that out, same thing. If you look at those numbers, just call me. Let's get an application in, let's run the numbers, see what you actually could qualify for. Super cool. All right, here's kind of a wild scenario I want to throw out there. Not everyone's going to agree with this, but it's pretty cool, and it was actually something that was done. It was really popular in the 80s in New York. So New York real estate has always been crazy expensive. I'm not licensed in New York. I don't do loans there, but this is just something that I know. When these younger dudes that, most of them were, in whatever business, maybe they were up and coming, they made some good money, but they can't afford to buy any real estate on their own as a single person out in New York City, even in the 80s. So what they would do is they would go in with maybe 2 or 3 people, maybe even 4, and you co-sign together as friends for this house. And then you just split up the mortgage payment. And then when it's time to sell it, you just split the profits. Like, how many times have you gone in on lease agreements with friends? You and a friend sign a lease agreement together. Buying a house is not that different. In fact, it's probably gonna cost you less money out of pocket than it would be to sign on a new lease. I had a client the other day that she was looking to get into a new lease, and between first and last month's rent, security deposits, all of that stuff, I wanna say it was like $12,000 or $15,000 out of pocket. That's a chunk of change for something that you're not gonna own, that's never gonna make you money, that you're just throwing money at every single month, and it's going nowhere. You can honestly get into a home for less than that using the right programs. So if you and a buddy, you've got decent credit, you've both got decent jobs, now you can go in and look at like a $400,000 house. You wouldn't be able to qualify or make that payment on your own every single month. Now you just split it up. And again, the more people you can get to do this, the cheaper it makes it to live there, and you all get a house to live in. And then when it's time to move, you just sell it. Or again, you can rent it out and split that up. That can get a little bit messy. I don't know if I would suggest that. But again, when you're ready to sell it, you split up the profits, and then you can use that to maybe buy your own house after that, or just go in and do it again. So that's kind of a outside the box idea, but people don't really think about those types of things. Maybe there is a good friend that you have, or a family member, or a brother, or a sister. Co-sign, get in together on a house. Split that mortgage payment up, then when it's all said and done, you split the profits when you're ready to sell it. Way better than renting. This one is for my self-employed people, or anybody that, if you're getting a 1099, so you don't get a standard paycheck. So this could apply to, DoorDash drivers or Uber Eats, anything that you have to report your own income on that Schedule C or on your own taxes. you're technically self-employed. Independent contractor, self-employed. You probably are smart and you write off a good chunk of your expenses to lower your overall tax bill. That's extremely common, we see it a lot. But what happens is when you go to do that mortgage application and you're looking at like an FHA loan, that's where we need the income. So if you're writing it all off and you only make $1,000 a year on paper, you're not gonna qualify for a mortgage, right? Well, we have a bank statement program for those types of individuals. We look at your actual deposits. We can go 12 months or 24 months, personal or business, and those deposits that are coming into your bank account every single month, now that becomes your income. Now keep in mind that program does require a larger down payment. You don't get the best of both worlds. You can't have that and down payment assistance. If you don't have the income on paper, that's where we use the other two. You've got the money, you've got the credit, bank statement loan would be perfect for you. And finally, the very unique loan solution that not a lot of people know about, don't even know it's possible. This one cuts me entirely out of the process, so I don't know that I want to share it with you, but no, I really do, because there is still a benefit. So if you truly have no income, not very good credit, and not a lot of money to put down, a traditional mortgage or even one of these bank statement loans probably isn't going to work for you. But there is something else out there called the seller carry loan. Now this is going to definitely take the right people and the right seller. Like this, you have to have the stars aligned for something like this, but it is possible. A lot of people use it for investment properties, but you can also do it on a primary residence. So let's say you don't qualify for a mortgage at all, whatsoever. You need a place to live. If there's a seller out there that maybe doesn't need a chunk of change, maybe it's one of those, one of those boomers we were talking about. They're sitting on, $800,000 in equity because they don't owe anything on their mortgage. They may not necessarily need a big upfront payout, because when you get a loan, you're essentially paying that off and they get that amount in cash as a seller. In this situation, the seller becomes the lender or the bank. They are now financing for you to buy the home. So you still become the owner on paper. You are buying it for a set price that you decide in the contract. Again, I strongly recommend you use a really good real estate agent that understands how to structure these, and you also need a really good title agent to help you work out the specifics as well. But you could say,
hey, Mr. Seller, I'm really interested in your house. I can't qualify for a mortgage. I'm wondering if you would be willing to do a seller finance deal.
And then what you can do is you can say, okay, let's work it out to where I buy this house from you for $350K. You can charge me an 8% interest rate for 30 years. This will be my monthly payment and I will pay you every single month. Here's $1,000 up front to show you that I'm serious. Let's write up the paperwork. You can write in all kinds of stuff. You can say, you know what, I'll pay it back in 10 years. And then in 10 years time, that gives you time to actually get qualified for that mortgage. You refinance it and then you pay the seller all the way off. So you can get really creative with these ones. Like you can set a 30-year term, a 40-year term, whatever the seller would be willing to agree to from a seller carry standpoint. If they agree to it and you guys both sign on it and you just continuously make those payments, you're a homeowner and you cut the bank out of the deal entirely. Seller carry, it's a real thing and it's super cool with the right people and with the right seller. Now again, eventually you're probably gonna want to refinance that to get the seller fully paid. That's where we can work out a plan. You can still call me on those ones. And I've done that. I've made the suggestion to some people that don't qualify at all. Let's maybe look at a seller carry option and then 2-3 years down the road, we'll refinance it because you own it at that time. When you do a refinance, you don't need a large chunk of money or a down payment or anything. You just have to have the equity in the house. You refinance it, pay it off, get yourself a nice monthly payment where you don't have to worry about that seller hounding you all the time. So these are just some unique out-of-the-box ideas that I think could be very helpful for the right person in this current market. Yes, I know it's expensive. Yes, I know interest rates are high right now, but homeownership is still valuable. And the fact that people are sharing these memes back and forth about, how these boomers are sitting on all that equity, that could be you 10 or 15 years from now if you can get into a house today. So let's find a way to make it possible. I believe that mindset is absolutely everything. So if you know you want one and you just need a little bit of extra help, or you just want to throw some ideas out there, hit me up in the comments. What are some unique financing opportunities that maybe I didn't cover in this video that we need to know more about, or maybe that I'm not aware of? I'm still learning every day too, guys. Like these are the ones I know about that I'm helping people with, but there might be other options out there. So hit me up in the comments, shoot me a DM. I'd love to see what your thoughts are on any of this. And if you are interested in applying today, there's a link in the description of this video, which will take you straight to my website. You can apply right then and there. Or if you're not quite ready to apply, that's okay too. You can schedule an appointment. It links directly to my calendar. We can carve out 10 or 15 minutes to talk about your options, your goals, and what we can do to make it happen. You can become a homeowner. Sometimes we just got to think a little bit outside the box because shit's expensive right now, but let's make it happen. Thanks.